Hey everybody, this is Sami with the Strategic Swing Trader coming on live to do a video for you and share with you um, my thoughts for the coming week, as well as give you a few ideas to consider for swing trading. So let's get started. I hope you've had a great weekend so far. I'm projecting the daily chart of the QQQ, which is the tracking ETF for the NASDAQ 100. As you can see, the Qs is in an all-out downtrend on the daily chart. Pretty sloppy, I should say. Here's the downtrend. You only need 2 points to draw a downtrend, and those are the 2 points. You can also draw another trend right there. But that doesn't really is not that important. So here's the downtrend that we have at the moment, the Qs, and those are the highs. These are kind of the lows. The bottoming tails are excluded. Actually, the pivot lows are more of a sideways trend, right? So we have a downtrend with lower highs and almost equal lows basing at the bottom there. That's the Qs. If we were to look at the SPY, similar picture. At the moment, the SPY is weaker than the Qs. We're at the lows for the year. The SPY is actually down 2.5% on the year, while the Qs is up, I think, 3.5% on the Qs. If we look at the monthly chart, I expected to get some basing here as we were dealing with the prior support. We got one bar and now we're almost breaking under it. This is sort of what happened with the IWM, the Russell 2000. We had one bar and then followed through to the downside right away. So that's what almost is going on with the SPY. I want to talk about a couple of things before we start looking at the ideas for next week. One, I learned one thing from Jim Cramer, right? I learned one thing, which is people are when they're bullish, they're not bullish enough, and when they're bearish, they're not bearish long enough. And I didn't know what that meant when I used to watch him 15 years ago, probably. I didn't know what he really meant, but I now know, and I've known for many years, when the market is bullish, people are usually bullish from here to there, and then that's it. And then the market continues much, much higher, right? And when they turn bearish, they're not bearish enough. They think, okay, bearish, and then that's it. And the market continues much lower. We see that more in a more dramatic fashion on individual stocks, such as, I mean, you name it, MU, right? Look at this. From when it was bullish from here, what was that? $5? Yeah, $5. Let me take out my crosshair tool real quick. $5 to $35. From and so how many people were expecting a 700% move? Not a lot, probably. And then when it turned bearish from $36 all the way back down to $10. Then from $10 all the way up to $60, right? So when you were bearish on it, when I was bearish on it, I didn't expect it to drop this much. When I was bullish on it, I didn't expect it to go from 10 to 60. Does that make sense? And it's not just MU. I mean, pick any name you want. Look at the LRCX from 50 to 250, probably to 230, now to 135. I mean, look at Med, same thing, right? From 50 to 250 and back to 100. Look at WWE. Look at ABMD. Look at Apple, right? So when we're bullish, we're usually not bullish enough, and when we're bearish, we're not bearish enough. So there's a lot of people that are trying to pick the bottom when I know the top is in. We've put in the top. It is not wise to try to turn bullish back to become bullish back on the market so soon. So my recommendation is to usually let the market prove otherwise, since in my opinion this was the top, and I did several videos on why I thought it was the top starting on October 4th, which is actually the day that we topped out. So it's not so wise to want to start turn bullish again. We do have conflicting time frames. The Qs is at prior support at a rising 20 on the monthly, and this is the Qs, but the SPY is no different really, similar, very similar. And then on the daily chart and the weekly charts, all out downtrends, right? This is, I don't want to say an all out downtrend on the SPY, but almost. And then on the daily, total downtrend. So not so wise to be trying to pick the bottom, and I think the trend continues. Last week I said I predict we will have the first down year for in the last decade, basically in the last 10. This will be the first one, and we're already down 2.5% on the year in the SPY, and we still have a couple more weeks to go. I also want to share with you one other thing, which is after a long, this is important by the way, after a long extended uptrend, once that is not pulling back, right? This was a long extended uptrend that's not pulling back. Usually, once you get a pullback, you will get a bounce, but that will be the last bounce either forever or for a while. So again, let me repeat that. After a long extended uptrend that did not produce any pullbacks, after a long extended uptrend that did not produce a pullback, once it actually does, you get a bounce, but that should be the last bounce for a while or forever. And how long did it take before we actually broke out again? Another year. That's back in 2000. And the pullback I think came in 2000. Yeah, 2015. We broke out after the elections. So November 2016. Basically, it took another year for the market to move after that pullback. So here we're having the same issue. We had a long extended uptrend. Finally, we got the pullback. The pullback worked, but that should have been the last pullback we will see for a while. And from there, we either transition into a bearish market or consolidate, 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 and then eventually break out, which was the case here. We had a pullback, and then we dropped again, but went back up, consolidated, and then went back up. So that's what's going on there. Okay. Historically, December is the most bullish month of the year. But the truth is, you shouldn't let statistics dictate your or influence your objectivity. You should just look at the market with fresh new eyes and let the chart tell you what's going on, right? Not statistics. And last week, let me see, last week, so I recorded the video on last weekend, so the 8th or the 7th or the 7th. We were actually kind of looking a little bit up maybe, but I expected to continue lower and close lower for the year. All right. My bearish bias remains intact, and again, I expect the market. I'm not buying that we're going to be bullish this December, and I expect the market to close down for the year. We'll see what happens at the end of the year, but I don't really care. What I care about is remaining objective and analyzing price action day by day, bar by bar, if we're looking at weekly or monthly charts, and make money. Because if you're not objective, then it's impossible to make money. You're going to be wrong, right? It's hard enough being objective and making money. It's much, much harder, if not impossible, to make money while being subjective, totally subjective, and deluded. Looking at some ideas for next week, we'll start with the bullish ideas, which I don't like very much, with the exception of the YRCW perhaps. This was a collapse, 50% collapse in 2-3 days, and now on the hourly chart, it's been stabilizing, building a base with a triple top, 1, 2, 3. So if we break above it, we'll have room to go back up to 18. I wouldn't be surprised if the LE broke out and retraced back to 18, which should give you a couple of Rs. So over the base, stop under it on the LE. I like it. PG is a utility, I think. Oh no, it's Procter and Gamble, of course, but it's a defensive stock. Defensive means basically, really, what it means is it's defensive to or it's immune from a recession, right? Because Procter and Gamble sells stuff that will be used and needed whether we're in a booming economy or a recession. So that's why it's considered a defensive stock, and that's why, precisely why, it's at all-time highs. Okay, on the daily chart, it has a 1-2-3 setup. This is the sort of 1-2-3 that I like because on the hourly chart, it's just a base. Sometimes what it looks like a doji bar on the daily chart is not a base on the hourly. In this case, it is. So I really like that base on the hourly chart. What I don't like about it is the divergence on between the moving average and price. Moving average is sort of flat, while price is making new highs. So there's a bit of divergence. So if it does trigger 1-2-3 higher, it should be short-lived. So it'll be, I'd expect for 1 or 2 bars and that's it. All right, on the PG. TNX, I'm not too serious about it, but it might transition on the hourly chart higher. Okay, this was an amazing move last week where we basically went from, we were up 250%. The TENX was up 250% and then closed down on the day 20%. Can you believe it? Being up 250% only to close down 20% by the end of the day. Unreal. So it might have some kind of a bounce. Whatever bounce it has, it will not be sustainable. It'll be short-lived, but that doesn't mean you cannot make money from a short-lived move. Does that make sense? You can get in and get out all in the same day. A YRCW is going totally climactic. I made good money from it on Friday and shorting it, and I like it a lot. There is no setup yet because I mean this is what I do intraday, and then if it looks good, then I hold it overnight. XPO, I had only one call on it. When a stock drops as much as the XPO did on what day was it? On Thursday, I guess, right? Look at this, down so much. Set up long here, failed. Set up long here, failed. Set up here, failed. It's easy to try and pick the bottom, right? And lose money. But on this one, I only called one play on it for the black room, and it was the bottom, and it worked. But I don't know what to tell you. At the end of the day, I closed out of it, and I was shocked because I meant to keep some. And then shortly after the close, it gapped up basically. It jumped up to 45.80. And I said, darn it, I cannot believe I couldn't believe I didn't keep some overnight, which is what I was telling the black room I was going to do if it closed strong, and it did. Luckily, in the after hours, after moving up to 48.50, it dropped back to 45.30. I had a bid for 500 shares at 44.30. I got filled at 44.33. I closed out of half and I still have half. So this was a $2,600 gain on Friday, but I still have half. And so if we look at the XPO daily, down so much, got the acceleration, the wide range bar, and what do we have on the YRCW? Same exact thing. So now we just need to get a setup on the intraday charts. So I'll definitely be putting this on a chart on Monday, tomorrow, and watching for a setup. If I catch the bottom and it closes strong, then I'll be sure to keep some overnight because it looks good on the daily, the weekly, right? My charts are slow to upload here, and the monthly looks pretty good. The monthly is not gonna. I'd have to open up the chart to see it. You might as well do it on your end. So, but I like the YRCW, just not as much as the XPO, but similar to the XPO. As far as the short ideas, I got the following. I have a core. This was a pretty bearish gap down on, I'm not sure what day last week, but early last week, and I traded it. It didn't move that much, but I'm liking it short as a breakdown. My only issue is we have this support underneath, still below. So that's the only issue. Otherwise, I like it lower. A core. Amrin is finally maybe cracking and breaking down on the daily. So I do like the Amrin lower. The triple BY, again, an example of stock that was super bullish until it wasn't. And then once it topped out, look at this, guys. Again, an example of not being bearish enough. Or on the way up, an example of not being bullish enough. It went from $18 to $70, and now from $80 to 11 bucks, with show me how many green bars it had on the way down. Just a few. In fact, this was a consolidation. Almost every month is a red bar. Every month. So this still looks um, to continue lower. It's in a picture perfect downtrend, and I don't care how much it dropped from 80 to 11. It still has $11 to go. It could drop to zero basically, just like the JC Penney is doing, just like Shield, Sears Holdings is done, just like GE is currently doing. It does not matter how much the stock drops. What matters is the way in which it drops. If it's a gradual trend, then that is the sustainable type, and it can just keep going. If it's a wide range climactic drop, then that's not sustainable. XPO, I'm expecting it to go back up a little bit. Um, I did a video a while ago titled "How to Catch a Falling Knife." You might want to Google it or YouTube it, right? How to catch a falling knife the professional way, and teaches you all about how to play climactics. All right. CBL in a picture perfect downtrend on the daily chart has a sell setup, and it has a money bar, has a shakeout bar. So sell setup slash breakdown if it breaks under 247. I like it lower right after declining 20. CNAT had a mega gap down and staying at the lows, so I'm expecting it to break under the lows and does look lower. HAE is one of the very, very few stocks that are still in an uptrend and kind of went climactic on the monthly. See this? That's a little climactic. So I do like it lower to about 80 bucks or so. Um, and it has a breakdown on the hourly chart setting up, as well as the daily. It's a little sloppy, flattish 20, but has good potential as a long-term play. Infi breakdown on the daily, flattish 20, so I don't like it that much. IP is a weekly sell setup, daily breakdown, plus a 1, 2, 3. I think the VCM is similar also. Yes, VCM perhaps is a bit more stronger, but has more room to drop. So it's similar to the IP. SFM has a money bar also, or a shakeout bar. So under the lows, stop above the highs, and I would expect it to come all the way back down. VMC is similar to the IP, very similar. It's probably in the same sector. Just looking at the charts, right? VMC that is. And then WRK is also another weekly sell setup. That's not bad, pretty good also. And what I don't like about it is the hourly, so that's not going to be a play for me on Monday, but I will be watching it on Tuesday, Wednesday until it actually either triggers or fails. Because I like the larger trend, but I just don't like the shorter trend. The shorter trend means I don't like it for now. The larger trend means I like it for later. It's still good. Of all these plays that I shared with you, about I don't know, that's about 10 bearish plays, 4 bullish. I have more also on my in my watch list, but I don't want to overwhelm you with too many plays. Of all these plays, I am only picking one for the strategic swing trader members. I'm only picking one. This is how picky you have to be to succeed in this business. I remember many years ago, in 2005, I believe, when I was buying my first home, and the realtor said that I was interviewing. I interviewed a bunch of realtors, and he said, I'm a very picky guy. I look at 14 homes before I buy one, before I finally buy one. And I said, that's not picky enough. I look at 1,400 charts perhaps before I pick one. And this weekend, I obviously looked at probably over 2,000 charts because I scan daily and weekly time frames at the end of each week. And at the end of the month, I scan daily, weekly, and monthly charts, my entire stock universe, and I'm picking only one. Okay, get that? Out of 2,000, I'm picking one. That's being picky. People look at 5, 6, and they say, "Oh, I'm playing 2, 3," and they say I'm being picky. No, that's not being picky enough, right? At any rate, hope you enjoyed today's video. Give it a like, leave a comment, share it. I like to know who's watching and who's stayed until the very end. I hope you enjoy the rest of the weekend, what remains of it, and I think this next week is going to be the last full trading week. And the 2 weeks after that will be, we have the holidays, obviously. There won't be full trading weeks. So do take some time off, enjoy yourselves and loved ones, and I will talk to you sometime soon. Take care, everybody. Have a good night.